what's going on in Bitcoin is people are buying on anticipation of the approval of the spot ETF. Now, if that spot ETF gets approved, you're going to see a short-term pop, and then probabilities dictate it's going to be followed by a sell the news. Obviously, Bitcoin's the winner by a mile, at least at this point, and most likely by year end. One of the unusual things here is that the dollar is actually moving opposite yields. Now, you might say, well, why is that going, why is that occurring? Because usually the dollar was rallying when the yield was going up.
The cryptocurrency market has been eagerly anticipating the approval of a spot Bitcoin ETF, as it's seen as a potential catalyst for increased institutional adoption and positive price movement. Experienced trader Gareth Soloway, with over 2 decades of experience, believes that people are purchasing Bitcoin in anticipation of the approval of a spot ETF. Despite the SEC's prior rejections of numerous Bitcoin ETF applications, their recent willingness to provide feedback and allow applicants to make adjustments suggests a shift in their approach. In a recent report by Crypto Rover on X, Valkyrie Investments has made updates to their filing for a Bitcoin ETF, indicating possible progress in the development of a spot Bitcoin exchange-traded fund. This update follows several months of discussions between Valkyrie and the Securities and Exchange Commission, hinting at a collaborative effort to enhance the quality of ETF applications. According to Soloway, if the spot ETF gain approval, it is likely to trigger a temporary price surge, succeeded by a sell the news pattern. Altcoin Cardano has been having a good time recently, rallying northwards with the rest of the crypto market. As per sentiment data, Cardano has achieved a significant milestone in dormant coin activity. On Monday, the network recorded the highest movement of older wallets holding Cardano since April 2022, signifying a resurgence of coins re-entering circulation. Additionally, wallets containing $100,000 to $10 million Cardano are once again in the accumulation phase. At the time of writing, Cardano is trading above 300 cents level, with a 1.30% increase in the last 24 hours. According to Soloway, this doesn't guarantee that Cardano won't continue to rise. At this stage, there's a 50-50 chance of it either going up or down. Now, let's shift our focus to a video. Before we get started, make sure to subscribe to the channel and click the bell icon for the latest updates.
And Bitcoin, guys, continuing to hover up right into short-term resistance. Remember last week, I ended up taking profits on my Bitcoin longs and then ultimately inching in a very small short just above 35,000 here. Now, the kicker here is this, right? Is that what's going on in Bitcoin is people are buying on anticipation of the approval of the spot ETF. Now, if that spot ETF gets approved, you're going to see a short-term pop, and then probabilities dictate it's going to be followed by a sell the news. Once it's approved, it'll be like, okay, well, now it's approved. What else is going to keep the price up? And it'll come back in just a little bit. Now, as long as you hold 31 to 32,000, that is your retrace buy level. All right, until it trades below. If it doesn't trade below, then you just buy there and you're good to go. If it trades below this level here, this previous pivot top that it broke above, then you have to start thinking further downside. But right now, respect that level. Now, I did just pre-market take profits with members of Verified Investing Crypto at verifiedinvesting.com on Cardano. We took about a 13% gain here. Take a look. This was my target right here. And again, look at the price getting right up above that 30-cent level. And again, I did take profits on that. So again, congrats if you're a Verified Investing Crypto member. Congratulations on that. Just quickly showing you guys here what the chart told me here. So again, and by the way, I want to be clear. Just because I unload here, right, pivot point here, it doesn't mean that price on Cardano isn't going to go up further. The reason you exit a trade is when probabilities become 50-50. So at this point, you now have a 50% chance of upside or downside, right? And so that's the key. And I think that's what a lot of people don't understand is that it doesn't mean because I exit a trade, it doesn't mean it can't go higher. It means that probability-based is that it's now a gamble. It's pure and simple. It's a 50-50. It could go up or it could go down. My strategy is strictly to stay with the probabilities on my side. So as long as it's 60-40, 70-30, 80-20, I'm going to stay long. But once you get to this level here, that to me is no longer an investment. It is now a gamble. And again, if you're investing, you are not or you shouldn't be gambling. And I think that's really an important distinction here, is to understand the difference. If you want to gamble, and I always say this to my members, is that if I want to go gamble, I'm going to get my friends together. We're going to go to the casino. I'm going to walk in with a few $1,000, whatever I want to do here, and I'm going to sit down, have drinks, have a great time, and I know that I'm going to be gambling and probably lose my money over time. When I invest, I'm not having the same fun as I'm having with my buddies, drinking and hanging out. This I'm doing to actually make money. So you have to understand the difference. One, you go have fun with your buddies, you expect to lose. This, I expect to win. And that's why I stick with the probabilities.
In 2023, we've witnessed significant events, including multimillion-dollar hacks and regulatory battles. The Federal Reserve is expected to keep rates steady for the second consecutive meeting, with Fed Chair Jerome Powell adhering to the bank's December hike forecasts. Interestingly, the yield curve is experiencing a bearish steepening, where the 10-year yield rises faster than the 2-year yield, indicating market concerns and an additional term premium on long-dated bonds. The US dollar experienced a decline on Monday, dropping to a 2-week low against the yen, as traders looked ahead to numerous major central bank meetings and a flurry of significant economic data releases in the upcoming week. Meanwhile, Bitcoin continued its remarkable surge, registering a 13% gain over the week. Soloway suggests that the current situation, potentially driven by the U.S. government's need to issue around $1.5 trillion in debt, involves creating more money, which may result in a weakening of the dollar.
We can see that the 10-year is grinding up just a little bit. It's still underneath that key 5% level. Now remember, folks, we talked about this last week. The 5% level right up here, that is the level to beat at this point. As long as you stay below 5%, you go on the bearish side. It doesn't mean you're going to get a big move down. I honestly don't think you'll get a massive move down, but you respect resistance until proven otherwise. So again, that's number one. So right now, yields are inching up a little bit, but we're still below the 5% level. The dollar, let's take a look at the intraday dollar. Look at the dollar here. The dollar actually having this beautiful kind of down move, inside bar bear flag chop, and then continuing lower here. Now again, one of the unusual things here is that the dollar is actually moving opposite yields. Now you might say, well, why is that going, why is that occurring? Because usually the dollar was rallying when the yield was going up. And the only thing I would say here is you have to understand the U.S. has to sell a ton of debt out there. They have to basically sell a bunch of treasuries. They're like, I think 1.5 trillion in the next couple months. And you have to look at it and say, okay, that's more money being essentially printed in a way, but at the same time, how many countries are eagerly rushing to buy our debt? And that's the key. There aren't a lot. So interest rates are going up, but the dollar is starting to descend here, and that's an interesting potential divergence that we have to keep an eye on. Now, quickly jumping over to the daily chart, I continue to be in the camp that the dollar has put in a mid to long-term high pivot. And again, the reason I'm saying that is because I'm using this trend line, right? We have this beautiful long-term trend line going all the way from the lows of 2021 all the way through these pivot points. Notice how we broke below it. Remember, this was support, right? So this is support because we're above it. When we're above it, it's support. And here it's support, then it bounces, it breaks. Once support breaks, it becomes resistance. So now, once we got below here, this now becomes resistance, and so on and so forth. So even if we, let's say, rally back up, this is still going to be resistance until proven otherwise. And notice how I'm using that term, until proven otherwise, meaning that I am not a 100% trader. I am never going to be that. The point is the charts give me probabilities, and I go with what the charts are saying. I don't rely on my gut, my heart, my feelings. Feelings don't matter in this game. Always remember that, guys. That is really important. The market doesn't care what you want. It is going to do what the probabilities likely are suggesting, and that's where we have to trade. We have to trade within that.
On Thursday, SEC Chairman Gary Gensler announced that up to 10 filings for a Bitcoin ETF were pending. They'll come potentially to the 5-member commission. I'm not going to prejudge them, but I don't have anything on timing, Gensler said. They all have various different filing dates. According to the Bernstein research memo sent to the Street Crypto, however, January 2024 might be a key date for the approval. That concludes our conversation for today. Feel free to share your thoughts in comment section below. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.